Hello and welcome to the stock specific class here for Thursday, March the 3rd. If you have any questions during the class that I don't get to or during the week, make sure you send those to jerry@traderspro.com. Let's get started with first looking at the market conditions. They were looking a little bit more bullish yesterday, but then we had a little bit of a bearish reversal today, so it throws a big question mark back into things again. And we'll take a look at the charts here in just a second. But as far as the direction alerts, not much has changed from Tuesday. We're still kind of right in the hold area right here. By the way, one thing you could look for, to know, because again, obviously, in a lot of these things, a lot of these charts I'm looking at, these stocks that I go over, I'm applying, over 20 years of trading experience, and so I can see things sometimes that if you're brand new to trading, you might not be able to see yet. So if you're just wanting to just use the software, wait for the signals in the software to kind of do the work, a little bit of the work for you. One thing you'd like to see these indicators, momentum, particularly momentum and breadth, start to move into this buy range right here. That is a little bit of a signal that conditions are a little bit more bullish to be buying into. So that's why it says bullish trend right here. When it gets into this range, it's usually you're in a bullish trend at that point. The momentum is on the buy side. Breadth, again, you get into that high range here. That means you're getting a lot of participation in the move. So you got a bullish momentum, and you've got participation with that momentum. And you'd like to see sentiment up there in this area as well. Although, again, one of the things has really concerned me is that complacency has remained really high. I think that's why we're seeing almost every dip still getting bought, but we're still ending up going lower. And we could still possibly go lower here. We might take out that Thursday low from last week if things start to deteriorate. I'm not saying that just yet. I mean, we're still kind of in a range where we could go either way. Those are a few things to kind of wait for as far as the software is concerned. Another thing too, if you go into the buy-sell ratios right here, this chart down below right here is the buy-sell ratios of all the stocks. Okay, if we want to look at buy-sell ratios of indexes, you can go to the index tab up here. And you can look at, S&P 500, Russell 2000. As these start to get over 1, Russell 2000 is over 1 right now. Russell 3000 is just barely over 1. As these get over 1, that's telling you that there are more buys than sells, and so that can be that as you start to get all these indicators, all these getting over 1, it can tell you that you're in a pretty strong trend. But going back to that direction alert right here, this is the buy-sell ratios of the entire market. And if you put your mouse just right on the where it is right now, when you see that number get above 1, and you see the buy-sell ratios of the entire market get above 1, and here's 1 right here, so you can see, well, it tells you we're pretty close. We're at a 0.83, so we're getting pretty close to that. Here's the 1 right here, so and that's not a straight line I drew, but you can kind of see when you're getting close to that. But one of the recommendations is that you don't want to be adding too many new trades until that buy-sell ratio of the entire market gets above 1. All that is just another indicator to give you a higher probability. Now I got into a lot of trades last week. We had that bullish reversal. That was based off of the charts and the candles that I saw, and so far that's worked out pretty good. And I got very aggressive there, and obviously the buy sell ratios of the entire market weren't above 1 yet. But there again, I know what I'm looking for, and even then, even if this doesn't lead to a market move higher, maybe we retest the lows again. I can always get out of those trades. I'll be able to recognize when this rally if it is fading. I'll be able to see some of the clues that it's fading. I am going to be stopping out of one of the trades today in the portfolio, but I can start to move back to the sidelines again if I see that those conditions change. And that's just because of the experience I have being able to read those charts. So what I wanted to do today was just kind of reiterate or spend a little more time on the software, using the software to help make some of those decisions until you get more experience in reading price action and reading the charts. And hopefully, if you're attending these classes on a regular basis, and I'm showing you some of the chart patterns and the price action on these individual charts, and then the market, you're starting to pick up some of those little clues and learning how to recognize some of that stuff yourself. That'll help you. Again, it'll just it'll help you recognize some things a little bit sooner that you can take advantage of. And that's always going to be the case with software. Software is always designed to make it easier, but if you if you can learn to recognize what the software is trying to figure out or trying to convey to you, a lot of times you're going to see those signals earlier, and you can make some of those decisions a little bit earlier. In this case, we're about a week early. I was able to get into some of those other trades about a week early. All right, so that again, it wouldn't take much of a rally in the market to bump that up to a 1, and I think it would take the market moving into one of the more bullish areas that I kind of pointed out on Tuesday that I'll go over again with you today when we look at the charts. I think it would get into that area, that zone, and be, again, it would be another clue that would indicate that the trend is more likely to continue to move up. Sentiment is still really low, not near any extremes, maybe a little bit closer to the buy extreme down here. I think one thing to kind of notice is that one thing that would cause me to believe that we're getting a little bit closer to a bottom if we're not at a bottom is that we're seeing some really negative news come out, and the market really hasn't been falling apart off of that news. And so that's usually a sign that sellers are already, most of the sellers have already sold. That's why when this negative news is coming out, it's not causing the market to go lower because they've already sold. For the most part, most of the aggressive selling or panic selling, I guess you could say, is already taken place. Or could have already taken place. Again, that can change very quick. I'm not saying that there still couldn't be another flush out move like we saw last week, but it's one of those little subtle clues that you look for. And what that means is that if we start to get any sort of positive news or bullish news, it could cause the markets to really take off. And so that's something I would be looking for is there any bullish news that comes across in the next week that really causes a big up day in the market and a good breadth day in the market, a lot of participation in the market. If that happens, that would be a sign that we're more likely at that bottom and more likely starting a new uptrend. Because again, what we have here is we have the sellers that are kind of exhausted, but we have the buyers that are waiting for a reason to buy. They want to get in, but they want to have a little more confidence getting in. And so if you get that positive news, and I don't know what it is, it could be anything, and it could be something that isn't necessarily that big of a deal. It's bullish, but it's not something you would in most normal circumstances think would be extremely bullish, but it could cause that market reaction because again, if buyers and you know this with yourself, always pay attention to your own ways that you make decisions, because a lot of times you think you're making those decisions exclusively, that the reasons why you're buying and the reasons why you're selling are yours alone, when in reality, most of the time, it's just, people are doing the exact same thing you are. They're feeling the exact same way you are at the same time you're feeling that. And that's why it always seems like, the market is kind of doing the opposite of what you think it should do, is because when you start to sell, everyone's starting to sell at the same time, and it's driving everything down. So you're not able to get out, or you're getting out in a panic, or you're chasing a stock because everyone's deciding to buy at the same time. But you want to pay attention to that. If you're right now feeling like, man, I want to get in, but man, I'd like to get a little bit more comfort to get in. There's some sort of news that make me a little bit more confident to buy right now. You're not the only one that's feeling that way. There's a lot of traders out there that are feeling the exact same way. And so that's, again, you'd look for that little clue. Is there a positive news story that comes out? It causes heavy buying, then, there's a good chance that that could be the start of a new rally at that point. All right, let's take a look at market update here. Charts. I have a little bit of a mixed market going on today, with the Dow up, S&P was mostly kind of been flat. NASDAQ has been down. Typically, mixed markets are more bearish. Just keep that in mind, that usually that's a sign of, because it's a sign of detachment, that you're not having all the stocks moving in the same direction. There's only certain areas that are moving. In this case, traders are selling tech, and they're buying industrials, or they're buying the big large companies. That's typically what happens when you see the Dow moving. Those are usually the largest companies in the market that are making those moves. But let's see here. Let's pull up the S&P. And what concerns me today is that we had a bearish reversal today. We opened higher. Here's where we opened. And as of right now, we're trading lower than where we opened. A lot of times that leads to a drop. Here was a case up here where you had a bearish reversal candle. It opened higher, closed lower, and then the next day had this big drop. Here was a bearish reversal candle, opened higher, and it closing lower, dropped after that. Here's a bearish reversal candle, held on for a couple days, but then dropped. So this type of, now here's a bearish reversal candle, then had another one the next day before pulling back. So it's not saying that the market's got to drop immediately, but what concerns me is that in the rally up here, you've had it's looking a little bit more choppy. So this looked impulsive, and this is looking a little bit more choppy right through here. Had a big run up, pull back. Now it's kind of trying to rally again here. That's the type of price behavior that can lead to another impulsive move down. On the S&P, this bullish reversal right here has been pretty significant. This was back on what day was that? Was that January the 10th? Yeah. We rallied up to that area here and it failed. Rallied up again here, it failed. I think there is some support in this area right through here, but I would look for the S&P. If the S&P can clear this right here, I'd be a lot more confident in the bullish trend of the market at that point. Now, I'm not saying you have to wait until it gets up here to buy anything. Okay, obviously you could look for those other things I mentioned earlier. The buy-sell ratio is getting above 1. But the market has not been able to clear that area, and it's been a pretty significant area. And so if it could clear that, that's going to give me a lot more confidence that that the market is moving higher. And again, I'm going to really watch the next couple of days. If that holds, again, we could maybe rally into the close and it could change the way that candle looks. But if that holds up this way into the close, we could be seeing a little bit more of a pullback. Market could pull back a little bit. Another thing to keep an eye on too is, from a bearish standpoint, is that big bullish reversal we had on last Thursday. If we start to dip into that, I think I talked about this on Tuesday a little bit. If we start to move into this candle, remember, it gapped down. We gapped all the way down here, and then buyers immediately pushed the market up. Within a few minutes, it was already up around here, and it kept going higher throughout the day. So buyers were coming in all during this day right here, and they closed it right at the highs of the day. So they were active all day long. The buyers were pushing things up all day long. The only thing that stopped them was the market closed, right? If we start to get back into this area right here, if we start dipping into that candle, then all these people that bought near the close, now they're underwater. And what are they going to start doing if they're losing money, especially after seeing that this failed right here? It didn't really hold this breakout. They're going to start selling, and then that selling is going to compound. It's going to cause the markets to drop further. Now these buyers are going to be people that bought in right here are going to be losing money. They're going to start selling, and it becomes kind of a self-fulfilling prophecy. It starts triggering, and it's like a domino effect. All that selling starts triggering a move that kicks you lower. Okay, so we've got a bearish reversal candle day. Watch for that, and then if we start to trade into this reversal candle on Thursday, that would be very negative. We shouldn't get in there at all. If this market is strong, it could pull back a little bit to this. It could pull back into here and then continue to move up. I mean, this could be, and that could still work out where this is a bearish reversal candle. Remember, these candles are very short term in nature. This is saying that there's weakness here. Maybe that weakness, maybe you get a bullish reversal candle right here as these buyers that were down below here step up and start buying again. But that's what I'd be looking for. If you don't see buyers stepping in right there to push it back up, and then you start dipping into this area here, you're going to start seeing selling pressure kick in. Now, I pointed out this area on the S&P where, and again, that doesn't mean that I can't start buying before then, but that's where I'm going to be a lot more confident in the trend, in the bottom, in this being a bottom, is if we can get up above this area here. But another earlier clue I think will happen in the Russell 2000. I think I covered this on Tuesday as well, but if not, I'll quickly review that. Where, let's go to the long-term chart. You have the support of this long 1 year sideways range that the Russell was in. It broke through that. It rallied back up to it right here. It rolled back over, and then this was that bullish reversal day last week. If we can get up back into this zone again, that would be pretty bullish, especially since small caps tend to be a leading indicator of the market. That when traders are getting into small caps, when professional traders are getting into small caps, it's telling you they're willing to take on a little bit more risk, have a little bit better risk appetite, which typically comes from being more bullish on the market. And let me zoom back in. That would happen earlier, meaning here's where that support level is. We're not that far away from that. So if the Russell 2000 can break back up into this zone right here, that'd be an early clue that we're more likely to see the S&P break up above its level, maybe a little bit later, maybe a week or two later, but it'd be trending in the right direction if we start to see that. That'd be a good early bullish sign if we can clear that. Now we've got a bearish reversal candle day, not as strong as the S&P, but it could just mean that we're stuck in this range here for a little bit longer. But with all the indexes, you want to watch that reversal, that candle from last Thursday. If we start trading into that, that's not going to be good. I kind of skipped over the Qs. Qs are down a lot more again, but notice the bearish reversal candle. They tried to open higher, reversed, and we're not that far away from that reversal candle from last Thursday there. Now, again, I'm not saying too that it can't dip down in there a little bit, but like I said, if it dips down into there and you're not seeing it come back off the lows, or you're not seeing like a hammer candle formation, or something like this where maybe it opens lower and then closes higher, where it's showing you evidence that the buyers are still there. If it closes at the lows of the day on higher than average volume inside that candle there, that's not going to be a good sign. And so that's something to kind of watch for in the next couple of days. I don't want to go through the whole list here. We usually do it on Tuesdays, but the bonds, one thing we were looking at last Tuesday was possibly this was a bearish ABC pattern. I'd counted 5 waves down from an Elliott wave standpoint, and then it should be followed by ABC, and then we got this big move down. Now we got a little bit of an inside day today. We want to keep an eye and see if bonds are making another impulsive move down, and it could be that this correction isn't over yet. Sometimes maybe that's wave A, wave B, wave C, and then it heads lower. But that's something to kind of keep an eye on there to see how that develops. Gold, oil, and the dollar are all moving higher, which is usually kind of weird. Usually there'll be a little bit of an inverse relationship between commodities and the dollar, but they're all moving up. Oil is an extreme high. I wouldn't be buying into oil right here, but if you're in some of the oil stocks and they're not telling you to, they're not triggering any stops or anything like that, then stay in them. They can, it can still continue to trend upward, even if oil, because we've seen some days where oil's sold off and the oil stocks have rallied, or vice versa. But I'm still holding on to mine. I'm still planning on hanging on to those oil stocks in the portfolio there. The dollar, again, keeps going higher. That's with the not too surprising with kind of the collapse of the ruble. It creates a little bit more demand for dollars around the world. VIX has still remained elevated, and again, I'd like to see the VIX come down quite a bit. I think you would see that if particularly the Russell 2000 breaks back into that zone. I think you'll see the VIX come down a little bit further. Not that I'm trying to compare the VIX to the Russell, because you don't do that. You can always compare the VIX to the S&P 500, but just that would be a range I know a lot of traders are looking at to be a little more confident in the rallies if you can get above that, back into that zone again. And I think you'd see the VIX come down off of that. All right, let's take a look at Bitcoin. I was a little bit more bullish on Bitcoin last Tuesday. It's since come down a little bit here. I still haven't been able to figure this out, because there was a lot of talk that cryptocurrencies in general could be in demand, especially with the collapse of the ruble and people trying to find ways to preserve their wealth as their wealth is disappearing. But we're not seeing it over the last few days, at least, particularly in Bitcoin, we're not. And so I'll be interested to see. Now that could start to take off very quickly and move if there is demand. But it's not showing up just yet that there's any extra demand on Bitcoin. All right, let's take a look at the sectors now. Again, the problem is we got a lot of the same stocks that are still sitting there. Until we see the market really start trending again, we're not going to see these stocks that are sells or holds. They're not going to be moving to buys or moving from sell to hold even. And so if it seems like we're going over the same stocks again and again, it's because that's what the software is giving us, and that's always a clue. I'm telling you, when it's a good buy environment, and you'll notice it when we get back into a good buying environment, that when we have these classes, there's almost always new stocks to talk about. When it's the same stocks, it usually means you're in a more of a stagnant market condition, and that's a good clue that you shouldn't be doing too much. So now I am going to kind of focus. Well, first of all, we'll go over a couple of stocks. Some of these might already be in the watch list. I tried to see if I could find some that I had covered before. But I do want to kind of point out a sector that I think is going to be a bullish sector for several months. It's a little extended right now, but I think that it'll provide some new entry points along the way. And so I'm going to just highlight it today so that we can start watching some of these stocks and looking for opportunities to be able to get into those trends. But start off, oil still near the top. We've gone over most of the oil stocks. I don't know if I talked about the CLNT yet, the 99 strength rank. Let's switch this over to signals here. Now this one, you could wait for the breakout. It's failed to break out the last few times, but it's had higher lows. So what you develop here is what we call an ascending triangle pattern. It's stalling out up here, but as it pulls back, it's giving you a higher low. So there's demand. It's telling you that there are buyers down here that are still buying the stock at higher lows. Usually this is the point right here. You don't usually get all the way into the corner of a triangle before you break out. This is probably when it'll break out, particularly with the way oil's been trending lately. You could wait for the breakout, buy the breakout. You could wait for this to go back to a buy signal, but I thought I'd point this one out. This is one that's looking interesting. And if you on a lot of these oil stocks too, I'd like to go back and look at a longer term trend. This thing's been trending up for quite a while, and it's just kind of consolidating through here. It can break out of this range, by the way. Usually when you get a range like this, and it breaks out, you can take the top of the range to the bottom of the range and project that distance upward. And that's usually kind of a minimum expectation of how far that stock should go after it breaks out of the range. It could go further than that. Here's a little bit of a sideways range right through here. When it broke out, you can take the distance from the top of the range to the bottom of the range. Now, obviously, this one went a lot further than that, but it gives you kind of a minimum target. Now here, this one right here, it went a little bit further than that range and then went into another sideways range. And then another one in the oil sector. I think I do have this one in the watch list. OAS 97 strength rank. And again, I'm just looking at, it's higher lows. A little bit of a double top up here. Kind of similar, maybe a little bit of a triangle pattern forming there, or wedge. Look at a longer term chart, you can see the same thing. Larger uptrend. So again, on these pullbacks like this, again, you can take the top of the pullback, the bottom of the pullback, project that upward. You can see this is about where we stalled out again as it went up that distance, and then it's kind of been this correction since then. So that's why we use them. They can be pretty helpful in helping us recognize potential target areas and things like that. In the finance sector, like Blackstone BX 95 strength rank. And what I'm looking at here looks like a little bit of an inverse head and shoulders pattern developing. You could wait for it to break above the neckline. This would be the neckline right here of the head. Here's the head, the shoulders. Buy when it breaks above the neckline, or you could wait till it goes back to a buy signal. But that one looks like a pretty nice, pretty bullish pattern right there. Now, the sector I want to kind of highlight is the aerospace, more specifically the defense sector. Now, if we're looking under the hold section right here, I pointed out I do like the charts of these top two right here, but I didn't realize that the strength rank was pretty low until because usually you'll get a few at the top of the list will be at least in the 90s here, but these were all the way down to the 60s. So, I don't know that I would really focus too much on those. I do want to go to the buy section of the aerospace, so right in here. Because I think you can take the big defense contractors, and these are I would even just focus on the well-known ones. NOC, Northrop Grumman, 94 strength rank. Some of them might be a little bit below 90, but General Dynamics, GD, LMT, Lockheed Martin, and then Raytheon right here, RTX. These four, I think we're going to have. I think we're going to see an uptick in defense spending. With everything that's kind of going on right now, I think this Russia-Ukraine thing is forcing us to look at our own vulnerabilities. Look at things that we didn't think could happen, and they're happening. It's really kind of scary with this whole thing because I wasn't alive during World War II, but I've read a lot of books on it, and it almost looks like just the same playbook. It looks like World War II is just starting up again here, in our day, and except in this case now there's nuclear weapons as part of it, so that can get a little bit scary. But now I don't know that I'd be chasing these right now. Here's Northrop Grumman, NOC. Look, it's gone parabolic. I don't want to be buying into that. Those look like some of the oil charts as well. But if you look at like a longer term chart of these, you had a really big run up right through here, and then it consolidated, a sharp run up here, and it came back down again, gave you another entry point. If it pulls back, I'd look to see if this previous resistance area holds right in here. You'd like that to become support. So you'd like to see it kind of pull back in a little bit more of a choppy fashion. It may not pull back that deep though, and that's the thing. But even if it pulls back a little bit, retraces this move a little bit, or moves sideways a little bit, that might be something to look to jump into. Like I said, I'm just pointing these out just to, they're outperforming right now, and they look like they could continue to outperform for a little while. But again, I got to emphasize, I don't like an entry point right here. So these would be ones we want to kind of just keep an eye on there. But NOC, then General Dynamics. And this has been consolidating right through here for quite a while. So you'd see if it pulls back to that kind of breakout area there. Lockheed Martin, LMT. Yeah, so those are real strong moves. I kind of wish, to be honest with you, if you remember, which one did we have in our portfolio or the watch list? I pointed a couple of these out a few weeks ago that were showing, they were starting to show some life. Raytheon, General Dynamics. These were showing up. I like these off of I like that off the pullback right there, off of Raytheon. The only problem was is that I didn't like the market conditions. The market conditions were still a little iffy, and I was mostly in cash. You can do this all the time, though. You can always find trades you wish you would have gotten into. But guess what? I did get into U.S. Steel, and that one's done very well. I didn't wait for the buy signal on that one. I got in on this little pullback. I liked the way the chart looked, and then I caught that move. So it's not like I missed every parabolic move. It's just that particular one I didn't get into. But I don't worry about stuff like that because if you've been around me a while, you know that I always talk about having a kind of a bus stop mentality. You're going to get another opportunity. Don't feel like you got to chase any move in the market. Don't feel like you're missing out on any move in the market. If you missed a move, fine. Wait for the next one. You're going to get another. There's going to be another group that takes off and that has a run, and try to capture that one. And if you miss that one, guess what? The market's going to give you another opportunity somewhere, and you just try to capture that next one. But don't feel like everything's a once-in-a-lifetime opportunity. That's the way a lot of people trade, is everything is a once-in-a-lifetime opportunity, and if they miss it forever. And that's when they make dumb decisions, because the signals might not be strong to get in, but they're so afraid of missing that once-in-a-lifetime decision that they jump at low probability signals and hope that they work out and pay off. And if you have that patient mentality, that mentality that you're going to get another chance, you might miss a move here or there, but you'll get another chance. You're going to be a better trader because of that. You're going to get better entries into your trades, and things are going to work out a little bit better for you. All right. Go to the portfolio here real quick. Halliburton, it's just been consolidating. I don't see a reason to get out of it. My stop is down below here, so it's a pretty tight stop. I was a little bit worried about it on Tuesday because we dipped down pretty close to it, but it just seems like we're still just kind of consolidating. No reason to get out of this one, because that again, whenever you see a stock moving sideways, you want to pay attention to the direction it's moving before it moves sideways. That's where it's likely to go after it's done moving sideways. And maybe this stays sideways for a few more weeks before breaking out, but it should break out higher. Let's put in our portfolio here. Devon, again, pull back a little bit Tuesday and Wednesday. A little bit of a bullish reversal candle today, but again, I see no reason to get out of that one. Murphy, same thing. These are all the oil trades. NVIDIA, it's just stuck. It's just been moving sideways all week. I don't see a reason to panic and get out of that one. I was hoping to see. Now this one again, I was a little more aggressive getting into. I didn't wait for the buy signal. I got in on a hold signal there. I think my stop was down below the Thursday low here, so we've got a little bit of room there. Although I may not wait for that, because again, just like with the market, if we start trading into that big reversal candle, I'm going to probably start looking to maybe just get out. Upstart looks fine so far. And again, it looks like it's kind of, I'd be a little bit more confident if it breaks out higher from this range here, but it looks like it's kind of moving up the right side of the bowl right there. Datadog. I'm going to get out of Datadog. I wasn't going to plan on stopping on that one, but. And now I believe my stop is down here, but this illustrates exactly what I was talking about. There's that. In fact, let me switch this to candles here. There's that bullish reversal candle. And again, buyers pushed things back up, but now we're selling into that. And we're more than halfway down that reversal candle. That's not a good sign. That tells me there's a little bit more risk this thing could keep going lower. Now, if I'm in a stronger market trend, I'm not going to be as jumpy to jump out of some of these things, but because I was a little bit more aggressive getting into them, I might be a little bit more aggressive getting out. Exxon, or not Exxon, this is U.S. Steel. I don't see a reason to get out of that one. SYNA, kind of like NVIDIA, it's just kind of been moving sideways here. It's a bearish reversal candle. It had a bearish reversal candle on Tuesday, and then it's held this area here. But I'll watch to see if it starts trading into the last Thursday's candle at all. HSON looks good. AMD, this one I didn't like today, and it was trading into that candle. I'm going to go ahead and stop out of this one too. I do have chip exposure with NVIDIA, so if chip sector rebounds, looks better. Still got that one to move up, but I think I'm going to stop out of those two. So Datadog, let's go ahead and hit sell. Come on here, they're freezing up on me here. Let's try that again. Here we go, and the current price is showing at 149.73. So I got to make sure. I want to sell 55 shares at 149.73. So about a $250 loss there, not that big of a deal. And then AMD. Sell 80 shares, and it's at 113.04. About a little over a $200 loss on that one. All right, so we got a little bit of cash now, almost 20,000, close to 18,000 there, but I'm not going to redeploy that right now because of the market conditions. But we'll see what happens here over the next few days. I did want to point out a stock that another one we want to keep an eye on that's in the watch list here. I wanted to look at the longer term chart on this, and then we'll wrap things up. But I still like where is it? UPS. Now you can say, well, this thing's come down quite a bit here. But if you look at the long-term chart on this, the reason why I really liked this one was, it had this triangle pattern right here. And I mean, and the breakout, what happened was the breakout happened on earnings. So we really didn't get to take advantage of that expected move, because it went from down here all the way up here. And then since then it's come all the way back. But it's still holding that trend line. Now I would wait to see if this thing can break out again, get back above here. But if it can, this thing should really take off. Again, the rule of thumb is you could take the top of this pullback to the bottom of that pullback, take that distance and project that upward as a target. And so there's a lot of potential there if it can break out. The breakout area is right around, what is that, Q10, Q11, somewhere in that area there. We're getting kind of close to that. Now, this looks a little bit more impulsive coming down. This looks like it could be a bearish ABC pattern. Maybe it rolls over and still drops. So that's what I'm saying. I'd wait till it can clear this up here. But if it can, and again, I maybe want the market conditions to be a little bit more bullish too, but if it can do that, I still like that stock. That's one of the reasons why I've left it in the watch list there, is because I didn't want to boot it out and then forget about it, because I think that could be a big mover. Now, I do want this to hold. This low, I think, should hold. You'd want it to hold as a higher low. So maybe things might change if the market sells off and this drops down below there. Maybe my outlook would change a little bit, but that's another one I wanted to highlight there that was in our watch list. All right, that's all I have. I don't see any questions. So like I said, if you do have questions during the week, make sure you email those to jerry@traderspro.com. And we'll see you on next Tuesday for the next market update. Have a great weekend, everyone. Bye now.